The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple. Welcome back to this week's iteration of What's Hot and What's Not. Pretty excited to come out. We've actually had, I got to say, yesterday in the markets, I was just absolutely so impressed. We've had so many Mondays, and I feel like since 2020 has started, Mondays have just been kind of like almost like a second Sunday. We just haven't had the movement. But I got to say, very, very excited with what we saw yesterday. Lots of movement back and down. The currencies were all over the place. The indices were moving. Even oil. Man, on a Monday, just amazing stuff going on. And there's all kinds of crazy news this week. Not necessarily planned, but we'll go through that in 1 minute. So welcome back. I'm glad to have you guys here with me yet again. Also have some absolutely amazing news. No, the wife is not having another child, but Nadex, we've gotten the Education Summit information down. You guys should be seeing things in your email, and it's extremely exciting. 2 days, 8 different sessions over the 2 days, and I was extremely impressed with the titles. I'm gonna probably attend all 8 of them. I'm presenting 2 of them, so I'll obviously be there for those, but great stuff. Start looking in your emails, guys. It's gonna be some good stuff, and I'm very excited to be a part of it. So let's just jump straight in because there's a lot to cover today. I'm going to ask permission right in the beginning here. I am actually testing something. As you know, of the last few weeks, I have mentioned more about knockouts, right? My students, and again, I use my students as kind of a feedback loop, right? Try this, guys. Let me know how you feel about this, and kind of like my own little personal think tank. And my guys have really been, guys and girls, have really been all over the knockout bracket. So I've actually created kind of I have a programmer that works for me. I've had him help create kind of a tool that I use for charting for knockout brackets, and I have it on my currency charts. Any feedback that you guys can give me as far as if you like it, you don't like it, I'd appreciate it. And again, it helps me out. And again, I'm trying to make better tools for traders out there to be able to use. So like I said, it basically puts them on the charts. And this is something that I feel everybody should have, and again, whether you're using the Nadex platform or you're not for charting. All right, so let's just go ahead and dive right into things. Let's go down. So for those of you that don't know me, welcome. I am an excited guy, maybe a little bit of adult ADHD, but I think we all have that these days, being cooped up. Very passionate about trading and doing what I do and what my craft is. I've been trading since about 2000, and again, seen 3 different market crashes for the most part during that time, 3 different, quote, crises. So I've gotten a lot of different experience in a lot of different traditional methods. I started with stocks and traditional options, found currencies, learned to trade futures, although they're not necessarily my favorite. Everybody has their flavors. Got introduced to binary options a few years ago, and I think it's an absolutely perfect suite for any trader out there. If you are trading stocks and you like stocks, add binaries in, or and add knockouts or call spreads. There's definitely something you can do, and again, I've put it in my quiver of tools, and I'm a big believer in it. Developed a number of different strategies, guys, for people that are more or less on the go. For those of you that know me, I try to stay very, very busy. Not only do I help run a school, now I'm in charge of homeschooling the 2 boys. They are 10 years old, again, both with ADHD. So if you've ever tried to herd cats and teach them at the same time, that's kind of what I deal with on a daily basis. So I focus on those guys. And then the little one right now, she's turning 2 in about 2 weeks, and I'm potty trading her. So I stay busy. I don't sit in front of a computer for 14 hours a day. So I've created a number of different methodologies, particularly using Nadex, 30-minute trader, 5-minute binary courses. And then this year I created and launched a kind of weekly breakdown as well as a high volatility trading course. You may have heard me talk about that one. Obviously, the markets have been a bit crazy with the pandemic, COVID-19. Your trading needs to change. And again, for me, I'm very thankful that I have Nadex as something that I can trade because it's been perfect for this high volatility trading. The volatility has kind of been sucked out, but again, doesn't necessarily matter because we will see volatility on individual days, news, and everything else. So when I'm looking at charts today, I'm going to mention, news releases, maybe some asset classes that you are not necessarily accustomed to. My trading style is a little bit different. I'm going to say this right now. A chart is a chart is a chart. Okay, it doesn't matter if we're looking at indices, if we're looking at Forex, or we're looking at commodities. If there is a market, if there are buyers and sellers, the strategies that I focus on, they work in all of them. It's just how the markets move. It's based off of supply and demand. So if you're looking at my charts and you don't see a whole lot of fancy lines and indicators and things you're not used to, just understand I'm trying to keep this as simple as possible. Again, removing a lot of the distractions a lot of people use. Okay, so that's just my caveat. So let me cover the disclaimer real quick, because again, when we talk about charts, money, we got to talk about disclaimers. So trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost to another transaction, including the fees. Now, the information presented here in this presentation is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility and at your own risk. I don't want any emails about, well, Brian said. No, I will talk about areas that I feel comfortable with. None of these are recommendations. If you decide to trade them in your account, it is solely on you, okay? Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Now, Nadex is a registered trademark of the IG Group. With that being said, let's cover the agenda. First things first, I'm going to go over the upcoming news events for the week. Now, today, we had Fed Chair Powell speak. Okay, he's one of those, I'd say, the big three that can move the market. Okay, one word choice, he can move it. So I'll kind of break down the rest of the week rather quickly. And then what we'll do, we'll dive in indices and look to see what if there's anything current right now, what I've seen in the last few weeks as far as what the best trading opportunities are, and then any areas that I'd be kind of looking for, maybe for confirmation or potential trades later in the week. Then I'll go into currencies. Now, you may not be a currencies trader, but again, chart analysis is chart analysis. You guys can pick up some pointers. I actually got an email last week from a guy that says, hey, I've never traded currencies. I typically only do stocks. What I saw you just show, does it work here? The answer is yes, guys. So you can pick up some of the chart analysis and the things that I teach my students, even in the Forex section. And then last but not least, commodities. Oil has obviously been a hot number. Gold, hot number. And I actually break down silver as well. It's something that my students have been trading. So it's something I've had up on my charts. In all fairness, I don't necessarily trade silver as often, but as I said, a chart is a chart is a chart. But oil has been pretty exciting, and we're in an interesting time. It actually didn't follow what we did last month. It's actually it was breaking out of the top. We'll kind of break that down in a chart and look for areas where we could see potential reversals. All right, so that being said, let's go right into news. Let me drag something in real quick. Again, there are many different sites out there that you guys can grab news off of. I tend to use Forex Factory. I do it because it has the scanner function at the top, and it's something that is incorporated into my trading. But many different sites have it. Daily FX is another great one. I'll actually show you some oil charts later on from Daily FX. I use this obviously for the pip changes. I want to know kind of how much the currencies have moved. One big kind of outlier for me right now already that we're going to have to look at is, look at this guy right over here. You know, this 142. That's a biggie, right? So first things first, let's go into news. As you can see, let me just click this. You can see big news today. One thing that I talked about with my students last night was this number right here, this claimant count change. You may say, what the heck is claimant count change? It's basically their unemployment number, okay? Interestingly enough, why is this important? Well, look at this. The forecast was 675,000, not nearly as much as ours, but as far as I could go back, like 10 years, I can never find a number even anywhere remotely close. The largest number they have ever had, right? Could that move the markets? Yeah, obviously, okay? So that was something we're looking for. Fed Chair Powell speaking today at 10, testifying. Again, he's always a guy you want to make sure that you know when he's talking. It's not a guaranteed mover, okay? He's not a guy that when he talks, like Warren Buffett. When Warren Buffett says, I'm buying or selling something, there's obviously a reaction to what he does because he throws around large bits of money. Powell, sometimes he can say things that absolutely nothing will happen. It didn't tell us any valuable information as far as a trader goes. But there are times when he makes comments that will set the market off. Okay, so what you need to do is not necessarily prepare for a big bit of movement off of what he says. Again, can it happen? Sure. But what you need to do is you need to focus on risk. If you have positions on and Powell is speaking, you need to make sure you understand how to control that risk. Because at any time, he could mess it up completely for you. Okay? So keep an eye on that. Tomorrow, early morning, there's some news for the pound, but the big thing, tomorrow is going to be not only Governor Bailey speaking at 9:30 a.m. Eastern time. Again, this could set the pound off, but this FOMC notes tomorrow. I don't expect there to be many explosions, but all we're hearing right now is the Fed basically has bottomless pockets, that they will support the economy, they'll support the banks, they'll do anything they can to keep the economy from crashing, and it's not necessarily in an area where it's crashing, but they could announce, future, cuts, hikes, whatever, whatever they want. Those come out in the FOMC meeting notes. So again, it's another one of those things where don't plan on big moves, but make sure the positions that you have on are protected. And FOMC notes, affects everything: indices, forex, and commodities. Now, don't forget too, tomorrow morning, and let me flip it over real quick for you. Tomorrow morning, we have, where is it? Right here. We have crude oil inventories. Now, last week in crude oil, and again, I'll cover this when we get to the crude oil section. Last week was the first time we've been negative in a long time on our inventories, meaning we actually ate up a tiny bit of the oversupply that we actually had. We don't have the forecast yet for this week, but you can see these forecasts have come very much down from where they were. I mean, up in this 19 million in surplus. With states opening back up, people will probably start leaving their homes. They'll start driving again. They'll start using some of the supply that we have. So this could be a very interesting oil number this week. And again, this will be 10:30 on Wednesday this week. All right. So let me go back up and filter out the lower ones out. All right, Thursday. Thursday is a little bit of a big day. Why? Because we have a lot of European data coming in. Okay. Now, again, if you're not a currency trader, you may say, I don't care. Well, guess what? One of our biggest trading partners is the European Union. We have French data, we have German data, we have the over European data, we have pound data, and then we start into the US manufacturing numbers. That kicks in at 9:30. You can saw last time it was pretty bad. It was at 36. Anything under 50 shows contraction, which you would assume, right? But this time we're coming in at 37, and then what do we have? Powell speaking at 2:30. Okay, so Thursday is one of those days where it's a lot of early market movement, particularly if you understand how to trade the dollar. And then bam, 9:45 and then 2:30. So I think there could be some nice trades on Thursday this week. If you are not looking at charts and you are not trading at 10, basically between 10 and 11, you're missing out. Almost every single day we've had reversals whether at 10, 10:30, or at 11 o'clock, bouncing off lower time frame zones. And if you don't understand fully, you know, what I mean by higher or lower time frame zones, that would be a reason for you guys to attend the Nadex education day at the end of the month. Actually the 2 days. I'm going to go over multiple time frame analysis on the first day and understand why it's so important, what you can glean from it. And that's why. But these reversals have been, they've been amazing, okay, down this time. This manufacturer number at 9:45 will give the market enough chance to react to this, spike up, and most likely it'll be a 10:30 or 11 o'clock reversal that morning. Already setting up, so I'm already pretty excited for that. Friday, all we got is core sales. So Friday looks like it's going to be a little bit of a slower day. We'll see what the week looks like, see how it's trending. Again, the market loves to end on a green, but we'll see what the numbers look like as we go later in the week. There's retail sales, which is going to be a big thing. You can see retail's down 16% is actually huge for the pound, as well as Bank of Japan press conference. And we'll see that we'll have a little bit of market movement because of the yen, but not too much as far as affecting the indices and the commodities. And then 7:30 a.m. These the monetary policy meeting notes is really going to give us a foreshadowing of how bad COVID-19 is affecting Europe and what it could mean. Now remember, COVID-19, it affects everybody. It's a global pandemic, okay? When we do have exports, a lot of our exports actually do go to Europe, okay? As well as we buy a lot of things from Europe, okay? If they are becoming crippled worse than we are, if we're a little bit ahead of the curve, which I believe we are still, it's kind of important to understand this. Now, do you need to trade it? No, not necessarily, but it's probably not bad to get the Cliff Note versions of this one early on Friday morning to kind of see what the spillover effect is going to be into the United States. All right, so that's that. That's the news as far as what we have for the week. It's a very, what I would call an anemic week for economic news. Typically, we have a lot more than that. It's a lot of guys talking. So when we don't see the economic data, the true facts of the overall market, typically what we hear is for lack of a better word, the talking heads, the media, right? We'll hear different speeches, people making comments, Twitter, all those kinds of things. Those tend to be the big market movers. So again, kind of keep your ear to the ground, listen, if someone's talking or, there's a random, again, one of the things I have a student that he looks at this is of when Trump is speaking and kind of if it's positive news or negative news. And again, when there are surprise things, it's either something really, really good or something that he's using to kind of deflect from something else, okay? So if you see Trump come on or start, tweeting at random times, there's typically something that's happening. And again, it's one of those things that, easy way to do it is follow him on YouTube, get a notification when he's speaking. Kind of a telltale sign of, something's about to happen, maybe, and I need to protect my positions. All right, so let's go over. Let's go back into Let's see, let me pull that out of the way. I won't need that right now. Let's pull back up the charts. Let's see. Bam, there we go. All right, so first things first. Let's go right into the indices. All right, as you can see on the hourly, looks like NQ has been putting in some work. And in the last couple of weeks, I've mentioned this, that NQ has literally been the most responsive of the three major indices. Okay, it has put in the most movement. It's put in the biggest, I'd say the largest kind of bullish effort. And it makes sense. You know, NQ is typically, you know, it's the tech one, right? Technology has not been affected as much. I mean, we're seeing things with Zoom and all these other companies out there. Everybody's pushing for online, remote work, new technology. So it makes sense, okay? Looking on a daily basis, we are almost back up to where we were at those highs, okay? We are approaching areas of selling. So if you've ever heard me talk before about areas of the curve and kind of where I start changing my biases, we're definitely more on the upper side. I am tending to look now more, is there a short opportunity for where we are? Some of the greats out there, Paul Tudor Jones said this summer, you know, he was predicting a large crash down. I also believe that we would get another push to the downside. And again, this could be spikes. It could be news of maybe it's not summer, maybe it's fall when wave 2 of COVID-19 comes around. I don't know when, but in kind of seeing the way that this top formed, it had a pretty good kind of top on there. So again, those are just some of the opinions, but you know, I am kind of looking for somewhat short opportunities more than anything else based off the daily. Now, into the 4 hour, you can kind of see the same idea. I mean, it's been pretty good, you know, over the last, you know, basically since the Sunday happened. The end of last week, obviously, we're pushing down. More or less, we're kind of flat now over the last, I'd say, you know, kind of 24 hours. I mean, this is what we're looking at, right? Trying to figure out, you know, the actual times that this coming in. So, I mean, this spike here was about basically at midnight, right? About 2 o'clock in the morning, we had a spike up. And actually, you know what I'm gonna do real quick? I forgot to change this. Let me change this real quick, guys. I apologize for not catching this one. I thought I had it all set tonight. And the reason why I wanted that is so I can see the time. I didn't even save it. I wanted to see the time at the bottom, and it's in yellow, so you guys can't see it. But what we're seeing right now is more or less kind of sideways movement. You're seeing a little bit of move from here, which is, you know, about 9 o'clock this morning. And there's a slight reversal up top, and that reversal, again, this is kind of what I mentioned before about reversals. You guys were able to see this. Where did this start to turn? Well, it started to turn right around the 10:30 mark. Actually, it's going to drive me crazy. Let me do it again. One more time. One more time. It's this one right here. I need to change to a dark color. There we go. Now I can see. So as you guys can see, if you look down here at the bottom, it's the time that I was looking for. You can see, starting at 9:30, what do we do? We rallied up, and where did the turn come in? About 11. 11 o'clock is where we started to have that turn. So, you know, we're in an area we've pushed up. Obviously, the reason why price did not go any higher is because we have sellers, right? If there was no sellers here, price would have just kept going. So we've hit a bit of a level on this one. Nothing super crazy. That I mean, I wouldn't say, hey, listen, this is a great selling zone. On the lower time frames. Right now, I would say if anything else, we're kind of more just moving sideways, kind of bouncing back and forth. Obviously, it's a peak and we're starting to pull back. I'd have to say in the next few hours, it looks like we're going to kind of, you know, probably attempt to kind of push back down in the 92.83 range. We'll see if there's any kind of news this afternoon that gives us a bounce. Overall, looking at this, at least on a 4 hour, one thing I am seeing, although there's not a clear level sitting above, and if I kind of click even the higher time frames, there's nothing there. You're seeing price not able to kind of rally higher, right? We had great news. Everything was happy, great. And now we're just kind of stuck here. Typically, when you start to see a large move in price and then basing and some wicks and some indecision, typically that is lining up for somewhat of a short. Okay, when I talk about a short, what I'm talking about, guys, is I think later this week, I think we may take some attempts to the downside. Any type of negative news in here could be the catalyst to send us to the downside. And there's a number of different ways to play it. Again, knockouts have been a big one that people have really enjoyed. Again, there could be some, you know, late week binaries as well. One of the problems that we always have with, you know, with the time that we do these is at 12 o'clock, trying to get a trade right now is always a little bit more different or a little bit more difficult. But again, I'd have to say for the rest of this day, I'm probably a bit more bearish, at least until price gets back down into this, you know, 9,200 range. And then we may see some stabilization. You can see that that was a very difficult area, right? This area right here, we spent a lot of time just going literally back and forth in it. Okay, so I think we'll probably pull back in and we'll probably end the day back into that range. But overall, I am looking a little bit more bearish this week. And, you know, again, very fast ascent up. We typically retrace, and now we have a failure to go any higher. sellers came in, I think that we may be looking for bears this week. All right, so looking at the S&P. So S&P on a daily, a little bit different of a picture, right? Here's where NQ is. We're pushing highs here. S&P is still messing around with this March 3rd or this March 6th gap, right? So a little bit different of a scenario, right? This one is more what I would consider in no man's land. Now you can see the ATR down here at the bottom. Again, we were peaking all this craziness. This collapse was way, way high. We've pulled more or less back to what normal looks like. It's still slightly inflated, but we're talking about 69 points in a day. And again, if you're unfamiliar with ATR, that's actually what my vast presentation is, how to use that on how to target. And it talks about things like ATR and understanding, is it a volatile time? Is it not? Where potentially could my trades go? I know for me in the beginning, I didn't use ATR as often, particularly with Nadex trades. And when I started using ATR, it really helped me with my strike selection, understanding what the potential is, where the movement could go to, and seeing this kind of fall back down again. I'm starting to kind of wonder, it's like, hey, listen, are we going to be bound inside of this range? Do I really need to focus on those lower time frames versus these dailies? But seeing where we're up in the gap is kind of a telltale sign. Now, very similar. What are we seeing here? We're seeing a peak, peak right here, right? What can I say about that peak? The last time price was up, it got forced down, gap lower, came back up, forced back down again. It made 2 more attempts, and the last time, boom, back down again. Now, we've been here for about a day, stuck within the same exact area. A lot of this movement, though, I will tell you guys, the reason we didn't have movement is because Powell was speaking, and the market was kind of like, we don't know what he's going to say. We can't prepare for anything because we have no idea what he's going to say, right? But we didn't get a big spike based off of what he says. We didn't get a big decline. So again, a lot of this happiness may have been those statements over the weekend talking about how we have unlimited pockets. We will backstop this economy. We're not going to let it fail. Banks are not collapsing. Now there's going to be a reaction to that. And kind of the same feeling, are we going to, push back to the downside? Using this level, again, the 1 to 3 risk to reward ratio is typically what I focus on to make sure that I have enough room to run. I may not take price all the way back down, but I need to make sure that it's there. And in this case, it's in a great spot. There's not necessarily any large areas of demand down there that I have to be worried about. The 1 to 5, which is kind of a secondary target for me, that is a little bit far. I do think that may have a bit more of a problem, but I think the 1 to 3 is a good guideline. And this is a 4-hour chart. So, again, I think there's some opportunity on this one, most likely to the short side. If Powell couldn't blow us through the top of this one, I just don't see a whole lot else, really. Again, all we can hear about is, think about what's happening. What type of news media without strong financial, like economic, macroeconomic or microeconomic information, all we're going to hear about is the media. What are we going to hear in the media? Do you think it's going to be positive media or negative media? I believe that, again, everybody has their own opinions. My belief is that we tend to hear a little bit exaggerated negativity because, again, negativity is that whole kind of train wreck syndrome, right? You just can't turn away. With New York opening up, Western New York opening up, Maryland opening up, Texas opening up, seeing spikes, I do feel that we will start to hear more about spikes of, cases of COVID-19. The news of the vaccine was great. It was 8 people, but again, that will only last for so long. I also feel this week, that we will have, potential move back to the downside here. I do feel like it wants to overtake that one. How would I recommend playing this? Honestly, guys, I don't want to beat a dead horse, but having defined risk in here, if you're not going to take this, again, defined risk in the futures market sometimes is more than it actually is inside of the knockouts of the binaries. There are binaries that we could take, right? I mean, this is the S&P 500. There are weekly binaries. But at this point, what did I say on the weekly basis? With the ATR shrinking, I think the lower time frames are better options in this case. So there are daily and weekly binaries, but I think what makes the most sense, because the problem with weekly binaries is they are printed on Sundays. Okay, they don't change. If we blow one of them out, it doesn't change. The knockouts, they obviously are more in touch with price. So I think the best way to play this one would be technically with knockouts for the rest of the week. There are some knockout levels right now. Sitting again, on the upper side, let's see, sitting up at ranges up at the 199.72, a 29.82, a 29.92, all sitting kind of right in this range, right? There's actually one sitting right above where my level actually is. So there's some good opportunity to be able to take shorts in this one. Now, again, if you're going to take a short, make sure you match the risk based off of your account profile. And again, make sure your analysis matches mine. But my feeling is there's about 2 knockouts that are good potential right now to take this to the short side. All right, now looking at the Dow. The Dow, while it looks great right now, I'm on a 30-minute chart. You can see we actually just bounced off of, I'll go out to the hourly so you can see it. We just bounced off at an hourly level. And that hourly level kind of kicked in at about 2, 3 o'clock. Again, this is the European Open, the spike up, the turn, and the drop. And we really haven't moved. We've been kind of stuck in the same exact place, more or less, right, on a chart hourly-wise from where we were yesterday, okay? The Dow is also in the exact same spot as the S&P, although it has not breached its March 6 gap. So, as I've said in the past, for bullish trades, the NQ seems to be giving us the best setups. Why? It's already more on the bullish side. It tends to be pushing higher. Now, it is at its upper range. For negativity, I've been playing more the Dow because the Dow, again, you know, the highs have been lower. We finally put a little bit more of a one in after yesterday, but the lows have also been kind of pushing lower. It's been more negative, right? It hasn't been able to punch a bit higher. And again, a lot of that has to do with industry and manufacturing. I mean, it is the Dow Jones Industrial Average. For me, because we haven't bridged this gap, again, I'm looking at lower time frames. You can see that on the 4-hour, we just banked off of a level. Again, this was a pretty nice level. This one has not hit as much as we saw before. Actually, let me change that real quick so you guys can, I don't know if you, I think you guys can see that one. Kind of where we're pushing down to. You know what? Let me see. I am going to change it for you guys just to make it a little bit better. Let's change this to a dark color. We'll change it there. We'll change the time down. There we go. All right. Now you guys are able to see it a little bit better. Now, in this case, unlike the NQ trade, this one, the 1 to 3 and the 1-5 are in both great locations. We've already started the pushback down from that level. And you may ask, where did that level come from? Again, this is just standard price action reading, right? This is the level where last time price was there, it was just slammed right back down again, right? I mean, look at this. This is 4-hour. This is multiple days of bearish sentiment off of that. And we haven't reached that level since. And now this time, again, we are pushing down. The lows are getting lower. We are in a downtrend on the 4-hour. Not that we've had tons of movement. But again, you got to be cognizant of where these levels are. And again, the 1 to 3 is in a great position. The 1 to 5 on the lower time frames, a little bit riskier because you do have some pullback here. But for the most part, I don't necessarily have an issue for this one. Again, same sentiment, 3 indices, all kind of with a bearish mindset heading to the downside. Okay. Now, would I get into a lot of these right now? I'd probably want a little bit more of a pullback. It is 12:30 in the afternoon. The overall kind of big traders in the market are out to lunch. They'll start kicking in about the next hour. Again, you don't want to sell after a big down move in price. You want to wait till there's a little bit of a pullback. Same thing. You don't buy when it's at an all-time high. You wait for it to pull back. So that would be the best opportunity for me in the indices right now is to be able to take those. Let me see. A question popped up. I have an account already. Okay, I'll handle those later. Is there any type of volatility theta? A little bit different, Katie. All right, so let's go across, and again, let's look at some of the setups now in the currency market, and then we'll cut back to gold, silver, and oil. So one thing I was talking about is the Aussie dollar. Now, Aussie dollar. I have a wish list, and you guys ever heard about that Christmas in July? Now, Nadex listens to every one of these broadcasts, so I'm hoping that the powers be can listen to me on this one, okay? We have 4 knockouts right now for currencies. The Aussie dollar is not one of them. The Aussie dollar is a great position to trade. Look at this thing on the 4-hour. So we've hit this thing multiple times, and it's provided excellent opportunity downside. We're actually kind of up there right now, although I don't believe this zone is going to hold. And you remember last week we talked about this zone as well, and we had a nice pullback from it, okay? Knockouts in this pair would be amazing, not only because of the Australian market, but because guess what the proxy for gold is? The Australian dollar, okay? Why is gold important? The United States is printing money like we've never printed before. That leads to inflation. That leads to gold moving all over the place. So again, this is a proxy for gold trading. I like where it is. I do think we will actually push a little bit higher. We've been in this zone. It actually stabilized and is pushing up. On the lower time frames as well, you can see, you know, right above this, we do have kind of another level. Interesting position because this guy can be played during the middle of the day, obviously because of the U.S. market and inflation, but also at nighttime with news. There's a couple different times this week where we have late news about 9:30 at night. Right now, the only setups I'm looking for, again, there's a lot of space above. I want to see us break through this level, and it is a 4-hour level. Some of you may have heard me talk about the, quote, Harry Potter trade. It's just a momentum breakout trade. I named it because of the lightning bolt on Harry's head. but I'm kind of looking for the same thing here. I'm looking for a break of this level. If the level does not break, and it does, if it is able to fight these sellers one more time, or fight the buyers one more time and push back down, no harm, no foul. But what I'm looking for is a continuation pattern to the top side. Again, this would be Aussie strength and dollar weakness, okay? This also coincides with what we were hearing from the president. He was very big, strong dollar forever, right? King dollar. But now we've taken more of a stance to kind of have a weaker dollar. Again, that stimulates exports, and that's kind of a big deal these days. Again, that also makes gold more expensive, which is also good for the Australian dollar. So what I'm looking for is kind of a break of this level here. That level break is coming in at approximately 65.79, 65.80 range. I'm looking for a break above that and then a bit of a pullback, and using that 4-hour zone as my risk level, looking for a push higher. So what I'm looking for is kind of a push here. We're not there yet, but I'm looking for this most likely later in the week. I think this could provide some good opportunity, something along those lines. Okay, but first things first, I needed to break through, give me a clean break, and then look for a pullback to push a bit higher. And for this guy, I'm going to have targets potentially up here. Now, if price turns and if those sellers do come in and they are stronger and it pushes to the downside, obviously no bets off, no harm, no foul. We didn't get into the trade. That's trading. Okay, we do setups, and if we use an if this then that mentality, that's what I'm looking for. All right, in the Aussie. Now, Aussie Yen is another great pair that's been fun. You can see Aussie Yen is just, since Sunday, this thing has just been taken off. It's been a great pusher, right? Now, it is pushing into, I don't need monthly levels. There we go. All right. So right now, looking where price is, this one looks very, very much like the S&P, right? What did the S&P do? The S&P kind of pushed up in this range. And here, I'll even switch across. Here's the daily, and here is the daily for the S&P 500. Okay. What did it do? It pushed slightly higher to where the gap is. Well, look at that. Almost identical to the S&P. All right. Now, we're pushing into a level where we have seen selling in the past. On a 4-hour basis, okay, let me shrink this a little bit. You can see that we pushed through the gap, but we do have a level sitting just a bit higher. Okay, this was kind of the peak of the pullback, right? I'll zoom it in so you guys can see it. See how it kind of pulled back and then boom, and then we gap back down again? This is the peak. The last time price was there, and we can see we took a stab here, took another stab. We have some sellers. Okay, we are approaching that level right now. And again, this is on a 4-hour basis. This is a little bit bigger of a time frame. Some of you may not be as comfortable trading that. You know what? Let me change it again. I forgot to do it. Let's see, supply and demand. Let's turn this to this. Change this to blue. There we go. Now you're able to see it. All right, so that's kind of what I'm looking for. Dropping it down to an hourly basis, just kind of get a little bit more of a detailed kind of view of this one. And let me put the overlays on. There we go. So you can see there's a zone sitting right here. Okay, there's the zone from the upper time frame. Obviously, that's not going to be green. Let's change this to we'll change it to pink, make it a little bit easier for you guys to visually see. Okay. There's where our 3-to-1 is. Is that a good area? Yeah, that's actually not a bad level to be able to take profit. I don't think I'd want to go much lower than that. So it's another one of those trade situations. Now, this is not a knockout pair. This is one of those ones you most likely have to take in binaries. Great ways to play the Aussie Yen. This is one that you can trade it with U.S. news base in the morning because the U.S. market stimulates what happens inside of the yen, but also nighttime. And this week, there's a couple different setups. Tonight, there's no Australian news. Tomorrow night at 10:30 p.m. Eastern, they're basically their version of Fed Chief Powell is speaking, Governor Lowe. Then you also have some news later in the week in Australia as well. But typically, you want to kind of associate this around a news time. That's where the biggest catalysts occur. But this is a very, very small zone inside of currencies. Even on the hourly, we're getting to an area, and it also coincides with what we saw in the Aussie dollar. Okay, kind of a hit and break of that level. Now, Euro Yen is a pair that lately I've had a love-hate relationship with it. The Euro was on absolute fire yesterday. Today, it's kind of slowed down a little bit. All right. So looking at the larger time frame for the Euro Yen, this is a very, very large push up. And whenever you see large pushes, kind of like what we saw here, we are typically looking for reversals. Okay. Now, where are we at? Well, here's a level where there's potential reversals coming right out of it. Okay, right there. And you can see we've already kind of the pullback. Question is, will we continue to push to the downside? Now, on a lower time frame, we may get a little bit better of a read. Let's check that out and see if I can refine that level just a bit more. Yeah, we can actually shrink this a little bit, kind of pull it back into that level. That pulls us back into a decent range right there. Oops, not that one. Put it right there. That's fine. and then we'll move across. So you can see that's exactly what we ran into. Now it is stabilizing from that level. It's not a big pusher. You guys can see, you know, to the downside. As I said, this is not a pair that as many people trade inside of currencies. It's either stale or it's moving. It's got two great shorts, but a similar position. The euro was on fire yesterday. Huge push up, and we haven't really had much of a pullback. Typically in currencies, we see a pullback and another short position to the downside. You can play this one with binaries, or you can play this one with call spreads, okay? No knockouts on this one as well, so that's not a knockout-based pair. Looking at the pound. So the pound has moved 148 pips in the last 24 hours, okay? So on a daily basis, you can see we've had quite a large bounce in this one, okay? Now, the pound yen had, I'd say, a pretty decent downtrend. We have not broken that downtrend. The highs are still lower. And the question is, are we starting to kind of turn here? Okay, so we didn't come all the way up. It looks like it's taken a bit of a break. This is one of those ones I'd say, I'd really like it to get back up into this range before we start taking some shorts. And again, this is just chart analysis with anything. When you see such a big big push down off one level, this only happens when there's sellers there. Right now, we're in what I would call a racetrack. There's not a whole lot of sellers. Now, on the smaller time frames, there may be a little bit. There's actually a wick over wick kind of sitting right here, kind of a little hidden zone, a little telltale sign. But again, I think this is one of those times where you just practice a little bit of patience. Wait for it to come a bit higher. It's a higher probability short when we come high. It only needs to move about 72 pips. It has a daily ATR of 156. So it only needs a half day worth of movement to get back up to that zone. I think this is one we look at. You kind of put this one in your pocket for later in the week. All right. Looking at pound dollar. So pound dollar. Dun, da, da, da. This is kind of our first attempt at getting these on the charts inside of this charting platform. So these are knockout brackets. And again, this is how I'm using the knockout brackets. I'm combining knockouts with supply and demand. And again, my students are having great success with it. This is like kind of like all we talk about these days is, there was a knockout here and there was a knockout here. Did you see this knockout? So on the pound has also stabilized a bit more. On the daily, this one did not have as much of a kind of spike up. It's much, much smaller. You know, this one in the last 24 hours is only up about 70 pips, where the pound yen is up about 150. So again, a little bit different between the two. But what we're seeing is there's really nothing here. It's kind of the same setup, right? A lot of stabilization. There's a knockout bracket sitting right above. That one is, where is it? Let's see. Let me move this out of the way. I'll say, wait, I can't see. All right. Let's see. That is knockout. Let's see. Did I move it already? 22. Oh yeah. Okay. So that's knockout one. So that was the first one printed for the week. That's the closest one looking to be broken. I don't really see a whole lot, at least on an hourly level, that tells me that that one is not going to break. Okay. I also don't really see much that tells me that that one is a great short. But if you look a little bit higher, I have an hourly zone here, and this is, in my opinion, this is a great hourly zone. Price came up at a pretty accelerated rate. It based for 1 hour, and then it just got hammered down. I love zones like this. I also like the fact that we have a knockout bracket sitting right here, which just happens to coincide with knockout number 5 inside of the pound. Okay. When price comes up, obviously this knockout one will be gone and it will be printed one higher. But this is a great opportunity for us. Now, there's a lot of pound news this week. So one way that you guys can play this going later into the week is you can figure out how to set yourself some type of an alert for an area right in this range. Okay, I'm going to do this in yellow so everybody can see it. Okay, depending on your platform, and again, the beta platform, I don't think it has it yet, but it may have it. I know if you're using like IG charts, which again, IG is also part of the Nadex family, IG has some amazing alerts that will actually go right to your cell phone. What you can do is you can set yourself an alert right before the bottom of this candle, and again, find it on your platform. Then you can come back and look at this and say, hey, listen. Price is approaching. Is there any type of large news events, anything that could act as a catalyst to drive this thing down in fast kind of succession right here? Okay. This is a perfect opportunity in my eyes to look for a knockout bracket. Again, we have, there is a little tiny bit of level here above where this knockout bracket is. So that, again, that is a little bit of additional risk. Again, that risk would be sitting from the top of my zone past that bracket. Because remember, if price busts through, it's not a binary. You will get knocked out. But that's, you have a pretty substantial amount of real estate in there to be able to take this thing short. Now, here's the next question. doesn't make sense risk to reward rate or wise for me. Okay, so if there's my risk level, because that's where I'm getting knocked out, and my entry is right here, is my 3-to-1, which just happens to be right here, is that in a good area that I have enough room? Now, I really can't see it right now. I can't make any type of call or assumption because I have not seen what price action looks like up to that level. And that's going to be why you have an alert to see if whether or not this trade makes sense. So this is kind of unfolding for later in the week. This alert, guys, if you guys know how to set alerts, put an alert approximately at 23 or 123.13. That'll kind of give you, the correct information. And again, when price comes up to there, we'll be able to determine whether this 1 to 3 gives us enough real estate, enough room to run. If it doesn't, then obviously this is not a good trade setup. This is kind of pre-planning for a potential trade later in the week. All right, for that one. Let's remove that, and then yeah, you guys get the point. All right, move this one down back to that level. All right, so screenshot that one. Euro pound. Euro pound. This one has a little bit more sideways movement. Now, euro pound on the daily, this one didn't have the same reaction yesterday. Last week, obviously, was a great week for the euro. The pound was just showing a ton of weakness last week. Now we're pushing back up. We are kind of in an area where we have some sellers. Unfortunately, none of those have really been great. We needed to put some new levels in, and that new level was actually put in earlier, actually late last night, right? Let me change this one real quick as well. I need to save this template. Let's see, put this dark, put this one dark as well. All right, so we can see that here's our 12 o'clock. So that level was put in basically yesterday, same time. And then last night, all we did, actually yesterday afternoon, we pushed down. And then this morning, what did we do? About 5 o'clock this morning, we pushed back up into that same zone. Okay, the same sellers that kind of stopped this massive rally are also who pushed it back down again. Okay, and again, this is why some of these smaller time frames are so vitally important. As you guys can see, this one has not only hit its 1 to 3, it hit its 1 to 5. So this would have been a great trade setup. I was not awake at 5 o'clock in the morning. I did not take this one in all transparency. But it would have been a great little setup, something short term. And again, your 1 to 3 risk to reward ratio was there. Big question is now, will we take longs off this bottom session, bottom kind of zone? This zone is actually pretty nice. I actually do like this zone. I think the formation of this zone was great. Price came down, it stabilized for about 2 hours, and then 2 large pushes right off of that. And those 2 large pushes, they happened at 11 o'clock our time. So it wasn't like a European-based news release. That's not necessarily a bad level. So as price comes down, and we do have about 20 more pips, so it's got about a couple of hours, but because the European session is over, it will probably start to get a bit slow. That could be a level to look at tomorrow. Again, I kind of hope that we just base now until European session. That's a nice little pop. I don't mind that one. Actually, and here's this. I'm going to give you 2 scenarios. One, because we are kind of retracing, oops, not that one. Because we are retracing a bit over here, and again, we do have the impulse, correction, impulse, and it's pulling back in a correction phase. That could be the takeoff point for a long, but we do have kind of a lower time frame, kind of failure to go higher situation. We could also have a collapse because there's not really a whole lot in this zone right here. We could be looking to overcome this area as well. So depending on the time that it enters this zone, we got to see if it's got enough oomph to be able to push through. And if it does, look for a retrace and then a short here, okay? But again, a lot of this is going to depend on when news is coming in, okay? So we have a couple different options on this one. This is not a touch bracket based pair either. So again, this would be a pure binary based. If we can coincide, like I said, I'd like to see how it approaches this zone. I want to see if it comes in strong. I want to see what time it comes into that area. And for me, that's really going to determine whether I'm willing to take this one for a long or wait for a break below and then just take it for a short, for a collapse position to the downside. And that collapse to the downside would look something along those lines. And that's a fine profit target for me to the down. All right. So again, we want to see what happens as it base, as it kind of come in very, very fast. Kind of an if this, then that. All right. Let's look at euro dollar. So euro dollar, obviously another touch bracket based pair. So on the daily, you guys can see that this one also has been putting in some work, right? Big yesterday. But what did it do? It ran right into a daily selling zone. And you see it has pulled back from that daily selling zone. On the 4 hour, you can see kind of the same thing. Let me take the overlays off. We can remove that. It got super close. And again, it ended up just missing the entry on this one on the 4 hour. And it started to collapse back down again. And you can see we have a touch bracket sitting a bit higher. On the hourly, okay, it is giving us a more defined zone. Okay, that defined zone is off of what we saw here. Again, big rally, push, 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 one more push forward, and then the seller stepped in, and that really kind of reversed this, right? That's what we're kind of waiting for up here. Now, coincidentally, we have a touch bracket that has been printed at the far side of the zone, okay? This is touch bracket number, well, I guess knockout bracket, sorry, old habits die hard. Let's see, 1017. This is knockout number 1, okay? This was the first one printed on Sunday night. If it goes beyond, obviously the knockout will be broken. If it goes beyond the zone, technically the zone is broken. So it coincides absolutely perfectly. This doesn't happen every single day, but it's another situation where, again, we have a nice little setup to the top side. Here is kind of what the risk to reward ratio would need to look like for us to be willing to take this trade. Obviously, we need to see what price looks like coming up, but it's another situation where we have dollar weakness coming back up, hitting a level where sellers have stepped in the past and said, hey, listen, I don't want this to go any higher. Another potential setup. And again, guys, that is knockout bracket number 1 inside of the euro dollar position. All right. Dollar CAD. So dollar CAD is literally falling through the floor. No coincidence that this one coincides with the price of oil rising. Obviously, the Canadian, their main export is oil. They rise and fall with the price of oil as well. Again, this is the proxy. We also do not have knockout brackets on the dollar CAD. This would be kind of cool for people that are a little bit more leery of trading oil or don't understand the oil market. They could also play this over here. So if you guys have any recommendations, write into Nadex and tell them, we want more knockouts. Give us more knockouts. We want to trade these things through currencies. We want Aussie dollar and dollar CAD. This is where we get it from. So on a daily, you can see it's kind of been chopping, right? But it's been up, tagging this zone, back down, up, and it's been kind of pretty consistent, right? We are approaching levels here where we've seen this in the past, right? We've seen price hit this zone before. And again, this is not the first drawing. The actual drawing itself should have occurred back here, okay? There's the actual drawing. Now, if you guys have heard me speak in the past, you've heard me talk about zones are only good. They're basically what they are doing for these bounces are they are grabbing unfilled orders. Well, there are only a limited number of unfilled orders. It's not like a forever order. Like, I will buy this every single time it comes to here. Typically, 3 and 4 is the magical number where you see them break. There's your 1. There's kind of a 2. There's your 3. And now this is number 4 going through the zone. Okay. As much as I would love to say, buy the heck out of this. This is awesome. I just don't have the confidence level right now because this zone has been hit so many times. I feel like we're now at the stage where we are going to see this one break. And what do I do in the case of a break? I'm looking for one of those Harry Potter, those momentum breakout trades to the downside. Now you'll see, I don't have any green levels below, or you can't see any green levels below on the hourly right now because it's been so long since price is there. It also doesn't show us that we have anything on the larger time frame till really down here, the 137.77 range. Okay, so knowing that, again, I can drop down and you can see there is a smaller blue level here, right? This yellow is drawn off the larger time frame. So I have a blue level sitting right here. Well, it's green now because I've removed the yellow. This has been hit for, this is number 4 hitting through. Okay, if it hits this zone and explodes higher, great. I didn't get into a long position, okay? I am looking more for a short position, somewhat of a break below. Again, a momentum breakout to the downside, basically meaning that this old level of demand is going to become a new level of supply. How does that happen? Well, price breaks, it goes a bit lower, comes back up and retests, and then pushes to the downside. We know that I don't have any well-defined areas of demand until 137.77, and that is below where my risk-to-reward ratio currently is. All right, so what I'm looking for is, this would be my risk level, okay? And then this would be where I'm looking for a potential profit in this one, okay? Now, kind of the same idea that we talked about before, okay? What if I am wrong? What if price hits this yellow zone and goes higher? Have I gotten into the trade? The answer is no. If I did not get into the trade, did I take any risk? Did I put my account capital at risk? The answer is no. It's an if then that trading. I don't have a crystal ball. I don't know if it's guaranteed to go through, but I do know if it meets my parameters and breaks through and comes back up and retests, I have a well-defined level of risk, okay? Now, dollar CAD is not one of the knockout pairs, so what you're gonna have to do is we're gonna have to time this one on a lower time frame, typically with a binary setup, okay? One word of caution for using dollar CAD. It's actually, in all honesty, it's not my favorite pair to match with Nadex. The reason why is the strike differential is a little bit bigger than some of the other pairs. I'm not a market maker. I don't necessarily agree that they need to be this big, but you know, it is what it is. Okay, that's the world that we live in. So just be sure that, again, the binaries are matching up. I tend to like to trade this one more around news because it is a very reactive pair. So we can meander around and come lower and kind of come down here. With tomorrow being an oil day, if we can break this level and pull back up in time for the oil numbers, again, if tomorrow's oil spikes because of the inventory numbers, which I expect there to be a bit of a deficit because, again, more people are driving, that would lead this pair to collapse. Okay, so it's kind of setting up for a position tomorrow, but remember the parameters need to be met. Okay, if I'm totally wrong and none of what I'm saying makes sense and it just continues to go higher, oh well, no harm, no foul, no trade, no entry, no risk, right? The only way not to take a risk is not to trade. But that's what I'm looking for in the dollar CAD. Now, dollar yen, as you can see, dollar yen actually just went off of his zone. Okay, it went off a 30-minute zone, and let me go ahead and change this real quick. Let's see, change this to a dark color here, and let's change this one to a dark color as well. Bam. All right. So areas that we're looking for in this one. Okay. You're able to see there's a bit of a zone up top. Now, again, I think it was off a 4 hour. Yeah, it's a little, it was a hand-drawn one, but here's how we could trade this on a lower time frame. Okay. All right. So we know that price pushed up. Okay. It got turned around right there. Okay, there just happens to be a knockout bracket. So let me put a line here and say, okay, listen, did that hit anything? Let's look back a little bit further. Unfortunately, when I updated the charts, it removed our lines from last week. But when we go back, uh-oh, look at this. Something turned it here. Something turned it here. Is there a level? Oh, look at that. There's a drop. There's a nice little base, and there's a push, and there's some tests. Now, none of these tests have broken that level. So look at this. There is the actual level, and it's a 30-minute level. A drop, a little bit of a pullback, and then boom, slam down. Test, test, test. Look at that. Okay. Now, what would your risk level look like in this one? There just happens to be a knockout bracket sitting right there. Okay. There would be your risk level, and again, you'd probably take a little bit more in that one, right? Something along those lines. And there's your knockout. There is your risk to reward. And this is what I'm talking about. Look at that. Okay. So if you're combining your zones with the knockout brackets, we're about to actually hit that profit target had you guys taken that one to the downside, or not necessarily your profit target, but your 1 to 3, the amount of level that you risked on that one to where your acceptable risk was inside of that knockout position. So where we are now, obviously this one is turning around. It's continuing to push through. It's almost 1 o'clock in the afternoon. We're about 7 minutes shy of that. So would I expect a huge reversal off this level? No, probably not. I mean, we probably got about an hour before really kind of the traders step back into the market. But the market's been turned. At this point, I would say that the market is a bit more bearish, right? We put a lower high in. Really, the peak today was at 9 o'clock. Now, there was that pre-market push up. We went into a level that we've seen previous sellers step into. It happened to hit the same level that, again, not once. What do we got here? That one didn't even make it. This one, seller said, no, no, no. No, no, no here. And again, no, no, no here. So this one is these sellers, these guys in this zone have been pretty, actually, that should be there. Okay. These sellers have been pretty strong, right? Pretty strong. And again, this is why it's important to obviously keep your charts updated. And actually this one would be there. So yes. Okay. You guys can see where the entry was. All right. That's dollar yen. I would say I'm bearish the rest of the afternoon as far as where we are on the week on this one. This one has been rather slow, but I am also bearish. It came off a higher time frame zone. I do see this one coming back down in probably the 107.50 range, dropping about 30 pips, but this one has been rather, it's kind of more like this is what it really looks like. I stretch it out to get better kind of view at candles. It's kind of slow, right? This one has actually been a bit slower. In the last 24 hours, this one has only moved 50 pips. Yesterday, actually last night when I did my chart school for my students, it only moved like 12 pips in 24 hours. You guys can see rather sideways movement. So I see a bit of a retrace down, and that's it for the rest of the week. Dollar Swiss. All right, so dollar Swiss. So on an hourly, the dollar Swiss has also been rather sideways, not crazy movement. One thing that I do like in this one is if you guys look a little bit up here, okay, this is actually a 4-hour zone. Okay, you guys see the dotted line? It's an overlay of this, okay? We have a zone up there. Yesterday, we had this really quick spike down and spike back up again, but no real movement in price. You guys were able to see it on the hourly as well, right? Really, it was kind of an up-down effect. That was also, that was Powell speaking as well yesterday, okay? That was, yeah, I can't go back for the days. Let me see. That doesn't matter. I can go. Oh, once we do that. Anyway, there is a touch bracket at 97.67. It's a little bit far. It's increasing the risk on this one by about double what it needs to be. This is not the ideal setup for me for a touch bracket. I prefer when it's a little bit on the other side, but it is actually approaching a zone on the 4 hour. So, it could be a potential trade. It has been an area that has been strong. Again, had you traded this spike up yesterday, it was, again, your risk level would have been sitting inside of this zone in there, kind of, again, the bottom side of where the 4 hour zone is up into the touch bracket ceiling. There you go. You guys should be able to see that purple zone, right? That's what your risk level would have looked like. It was a viable trade. Again, one of those ones that you had to be there for it. It did not spend a lot of time there. And as you guys can see, again, was it a valid, did it move? Did it move? Did it do what it needed to be? Yeah, instantaneously. It popped up on an hourly. You guys can see here. It popped all the way up, came all the way right back down again, and has been out at that 1 to 3. It was less than an hour-long trade. So, again, timing these things is really the most important. Is that an ideal setup with a touch bracket? No. Did it give you defined risk? Sure. Was it, an acceptable limited risk? Yeah, it was about 12, 14 pips in there. So not necessarily a bad little trade setup. Had you guys taken it. But right now, again, we still have the same touch brackets valid. This one has been rather slow. Again, you guys can see on the 4 hour, very, very much sideways movement. All right, so let's look at gold, okay? Commodities, and we will get out of here. So gold, on the big picture of gold, we're up there, right? Kind of on a weekly basis, you can see there is nothing. I mean, it's been a long time, okay? So you can see that we are approaching weekly levels of supply. Now, this weekly level, I mean, this goes back pretty far. I mean, we're talking about going back to 2012 was the last time that gold was up this high. Now, for the most part, I've been bearish gold, okay? Gold has obviously had major kind of move back to the downside, okay? And those are the zones that I've been playing. With Friday's announcement of the HERO Act, the CARES Act, or whatever we're calling it, I mentioned it last week. There's about 4 different stimulus packages looking to go through. When the Fed says we have unlimited pockets to make sure the market doesn't crash, that basically means that there is a dude sitting there somewhere that's hitting the button that says print money, and he's just hitting the button, right? It's like the easy button. He's going print more, print more, print more, print more, print more. That's how they're propping the economy up. That is going to lead to inflation. Inflation is not here yet, but the market is preparing for it. So, are there opportunities to go short? Sure. There's a weekly level sitting right here, right above where we currently are. Okay, so yellow is going to be our weekly level. Actually, you know what? Let's move this over here. Okay, so there's going to be the weekly level. Dropping it down to a 4 hour, we do actually have a bit. And look at this. Gold kind of cranked back from that level. On an hourly basis as well, you can see this is actually giving us what I would call a short-term selling opportunity. Okay. Not a bad little level up here, right? We would be looking at probably shorts in here. Now, again, does it have the potential to pop higher? Sure, but, again, there's so much movement off of this. To make candles this big, there's got to be sellers in the market. So, again, what I would say is there's a potential short up top. We got quite a bit of room to run until we get to that time. In the more near term, I would say I expect this probably to kind of meander around, maybe start to push down and see if we can tag new lows here. But like I said, with everything with gold right now is literally hinging on, is the stimulus going through? How much money is it? How often are we going to get it? How much more money do we need to print? And all those things are yelling bullish gold, okay? So again, any short-term opportunities are going to be kind of advantages inside of a minor, inside of a bullish trend. But I think if anything, the best opportunity right now for me is if price is able to rally back up again. None of the shorts down here, I don't necessarily love it. I do think there is a viable long down here at 17.15. 90 to kind of push to the top side. The last time the price was there, it did have an explosive move, large body candles at the top side. We're kind of in no man's land in the middle. Now, silver is also pushing higher. This is the daily. Gold daily is up here. Silver daily up here, and we are kind of in and it's not a great example, but this is kind of a bad level that we're sitting in. But you saw price last time it hit, it did push higher. I'm sorry, it pushed back to the downside. It's not really the best level. Is not one that I would have traded. I'm not surprised it bounced, but it wasn't tradable for me. But what I'm looking for is what's going on right here, okay? Inside of this pattern, you guys can see that the wicks are getting lower. Typically, that means that there are some sellers, and actually here you can see that the indicator has actually done its job and kind of it's highlighted the lower one here. But what I'm looking for is this zone up top. I think this is going to give us a little bit of a problems. Of the two of these, silver is the one that I'm least likely to play right now. I think gold is kind of where most of the big players in the market are. you know, is what it is. This one is sideways and it just has irrational responses. So unfortunately, when I was looking at this earlier to see if I could get you guys a good silver one, couldn't find anything that was too great on it. All right. And going later in the week, I think gold, if you're going to focus on either two commodities, is probably the best way to do it. Now, last but not least, we got, I'm going to take just a couple more minutes of your time. I know we typically try to get out the one, but I wanted to get this in there. Here is our gold chart. So here's oil. Here's our daily oil chart. Now, interestingly enough, last month, boom, we collapsed. We did not collapse. We're actually pushing higher. We are a bit bearish now, and this is what we're kind of stepping into. I will drop it actually down to a 4-hour chart to make it a little bit easier for everybody to see. So I do know that we have a level of sellers sitting right here, right? Gold has not been able to clear that zone, okay? We've seen price hit it once, we pushed higher, and we didn't use that as a base level, right? So this is the one we talked about last week, okay? Now, I'm looking for kind of buying opportunities off of that same level, okay? Go back further. Actually, here, let me mark this off just to make it a little bit easier, all right? Okay, you can see that we had a basing level here. And you know what, let me change the color of this. We'll change this to blue, okay? And then here's the basing level, okay? Drop that on hourly. Let's go back and I'll do the same thing. Yeah, that level is fine there. And let me mark off here and here, okay? All right, so these are two hourly levels that I was looking for shorts off of. As you can see, the first one has already been hit and is going lower, right? We have, whoops, one there, one here. And that area that I talked about earlier is lower. Now, on these smaller time frames, neither of these is a gigantic kind of push, but I'd probably be looking at that level right here for potential buys, okay? And again, you're talking about 28.43 to 27.27. Up top, we had this 32.99 to 34, kind of a big zone, but we didn't really spend much time there. We could actually shrink that down on a lower time frame, but I'm running out of time, so I don't want to go much farther. But as you can see, we're starting to push. So to me, it looks like we will be bearish into tomorrow's number. I'm very curious to see what we do in the overnight and see where we are placed. If we were able to be bullish and we push back up into this 32, basically $33 range, I think I will be looking to be bearish tomorrow morning for the actual oil release. You know, like I said, a lot of this depends. I think the number will miss, but I think so many people will think that it's going to be off. If we push into the zone of the overnight, we'll push down. If we push lower, there's not many great buying zones here. You know, I think my trade for tomorrow is I'm looking for, if this rallies up, I'm looking for shorts to head back to the downside. All right. Like I said, oil's not really, unfortunately, too much of this kind of a pop and then just the base, but none of it is like super explosive. I can't say that I really love any of it. And again, there's like a small zone sitting right here. This will probably be the hiccup for later today. This may be the hiccup in the overnight tonight. All right. Here, I'll put some lines on there so you guys can see where that one is coming in at. Okay. All right, so that's what we're looking at. That's 31.11 down to 30.79 if anybody's interested in seeing where that pop is. I think this is going to give us a bit of resistance when it comes back down. I think it's going to pop and probably bounce around a bit. All right. All right, guys, so that's it for today. Sorry, I apologize for going a little bit over. A lot of talk about, a lot of stuff going on. Make sure you mark the calendars off next week. It'll be May 26th. The Nadex presentation for the 2 days of education, the education extravaganza, is going to be the 27th and 28th. So look in your email boxes for those. Make sure you guys get signed up. I will be speaking on both days. If anybody has any questions, like always, you can hit the website. You guys can check out the classes on this website right here. Or, and again, this is what I prefer. You can either send Nadex an email or shoot me an email at support@keeptradingsimple.com. Thank you guys again so much for joining us, and I will catch you guys next week. Take care.